Okay, yes. So, what are we looking at right now then? Um, this is the range we're playing with today. It's what I'm going to be using to look for trades. As you can see, we've now pulled back well above the 0.5. We're above the 0.618, and we're approaching this volume point control from Friday. Now, this was Friday's initial balance, this zone here. We are pulled up into that now. It's not really offering much resistance. You can see here fractally, it just keeps printing higher and higher candles. Um, we'll see. I'm looking for a nice area of interest to hit. So you've got this 5 minute inside 15 minute, these highs here. You've got a time point to control, and you've got a buy to sell zone there. But more importantly, I think you've got that. What I would consider an institutional supply zone, because it's a supply zone that led to a break of structure. It achieved something significant. And even though it is on trend, so it's less significant, but regardless, it still broke lows. It was still, the point before the low was broken. Now, if that significant point of the chart was broken and, we do get above these highs, I'll show you why that is a lot more significant and why I've called that, I've basically marked that level out as being significant. But yeah, so today, just focusing on the lower time frame price action, this is what I'm really looking for. I'd be almost even tempted to just place a limit there anyway and look to trade that down because the risk to reward is so good. If it is to just keep going, you're looking for that, at least that gap, and then those lows are very doable. You've got the higher time frame levels below. You missed out this daily supply, this daily demand here with a 4 hour demand inside that. So you could be looking for that to get mitigated. So yeah, if we do just keep going up, I'm really looking for shorts. That's pretty much my bias on the day. If we do pull back, you've got this 4 hours of the mid block here, which is what it's built up over the Asia session. So if Asia's to hold, this could look for a bounce. It's very risky though, because obviously we've ran into premium supply areas. Pretty much, so close. You've ran into premium supply areas. If you do start pulling back and you do start shifting internal structure bearish, it aligns with this bearish overall structure we've got here. So you're very risky on the longs there, especially at the midpoint. Yeah, wouldn't really be looking for longs today at all, unless it was a quick in and out. Or you were just looking to play this trend and you have really tight invalidations. But yeah, longs aren't ideal today. So let's go to what could be next if we do break above. So obviously if we break below, we're going to be looking for the same sort of thing. We're going to be looking for some bounce in internal break of structure, and we'll be looking to play that trend back up. And we'll be looking to short down into those areas and potentially long out to those areas. Okay, simple enough. But let's say I'm totally wrong, we go above these levels today and market shifts bullish and demand takes over. Happy for that to be the case, because being wrong is the price of business and trading. Okay, so let's say we do break that high. What has this achieved? It's broken this internal high here, because obviously that's the high that we marked out, that broke the previous low. That's the high that broke the previous low. So that's a strong internal high. That breaks, shows an internal shift in its structure. Okay, what can we be expecting next? Well, we could potentially, this is getting messy. We could potentially, we potentially consider this our new lower low, because obviously we've been looking at this overall bearish structure. This was our lower high. We had that confirmed when we broke the low, and since then we've just been going down and down and down. Obviously we broke that structure there. So what do we expect when we break structure? We expect a pullback to facilitate the overall trend back down. Okay, so previously I thought that this may have been that pullback because we were breaking some internal highs, but we did really just SFP them and collect some liquidity for that larger move down. So, you know, we are continuing this one move down here. This is still the same sort of run or leg. Now we do break above there. We break above those highs and we hold. We look for some sort of pullback. We can potentially look for longs. And we can look to ride that into these areas up here. Now, look at this. You've got a daily area of supply here. You've got daily close coming up to that 0.5 level. So this is the low here. You've got that 0.5 level there. Do go a bit lower, which would be probably a bit better. Let's say we bounce off the 0.5. You're looking at we bounce off this 4-hour demand here. Look at the 0.5 pretty much smack bang in the middle, that daily close there. And I'll show you another reason why I think this is quite significant. It's definitely something to mark. I wouldn't say definitely something to write down or note for sure, because you've got two conflicting factors here. So, you know, we've been talking about this high time frame structure here. Obviously, that broke daily breaking structure there. We've pulled back into the discount prices. We're looking at collecting demand right now, so we could reasonably believe that if we are to grab longs, or we are to bounce in these regions to start breaking internal structure, I definitely wait for 4-hour structures to break after you've hit these levels. But you know, if we hit these levels, we could reasonably believe that that was just a pullback to facilitate the larger overall move. So this was the break to facilitate. This was the move down to facilitate the larger overall move, which would be this. Okay, so that's a reasonable, it's a reasonable thing to assume, to play. So whatever, that's what we've been talking about. But I just want to point this out as well. So now if we look at this from a sort of side-to-side perspective, look at this as sort of overall, okay, you can see that it spent a lot of time last year just going sideways and pretty much didn't really achieve that much over, you know, a good year. And now if you mark out the highs from this range here, you can see, you know, ranges are very... They're a matter of perspective. It's how you sort of see them. So this could be your range high, because look, you've got reaction there, reaction there, reaction there, reaction there, etc., etc. This could be a range high. You know, people see levels differently. You know, it's all the same candles, but everybody sees them differently. This could be a range high also. So I've just marked it as like a box, like an area, and you can see here when we came back down and we broke these lows here. We did form that daily supply zone, and it did reject off those sort of range highs. So if that is an indication that price has entered back into this range, then we could also reasonably be looking at range lows. And to be fair, even though this is a bullish trend that we're looking at, you know, this is the idea. It's broken our structure, looking for that pullback, looking for the next high. That's reasonable, but you could also be saying, well, on the bear side, we've rejected this range high, so we could be looking towards range lows. And funnily enough, they sort of go hand in hand. As long as this low holds, this is our swing strong low. This is a very, very strong low. As long as this low holds, you can effectively play this range still. Look towards these range lows where you'd be looking at high levels of demand, where you could potentially be looking to play that even further. So this could just keep going lower and lower, and we could still have that overall bullish bias in the market. I don't think it's doomsday at all until these lows are broken, really. Then you start to look into COVID levels, which is kind of crazy. But yeah, that's the macro. I think it's worth pointing out, but you know, nothing to worry about. If you're just a day trader, it doesn't really matter. You're playing the intraday levels. You're just looking for high time frame levels where you can expect some reaction, and then you're looking for your low time frame signals and confirmations so you can act upon that. And that's it really. Also wanted to show you this. I think these are quite cool. These are just fib channels, so these are obviously the channel, and then you've got Fibonacci levels that extend beyond them. If we just had that one, you can see there's overall like sort of midpoint here. This is the first level here. That's like a 1.272. And then you've got the smaller one that's inside it. You can look at that, and that's like the 1.618. And I just thought it was interesting to see that these line up with the areas of demand we've been looking at. So you can see if we do drop into those regions, we do it relatively soon. You're looking at a nice bit of confluence there, to be honest. So, that was kind of cool. But yeah, back to this range. This is what I'm playing with today. Don't need to make it more complicated than it is. I know I probably have done, but let's just trade with it. It's 15-minute range, okay? Looking for shorts up here. If we do break it, then we could potentially be looking for that pullback where we could grab some longs, and we could be looking to play into these higher regions here. So very much an important level. Definitely mark this level out. If it breaks, looking higher, well, obviously we'll pull back then higher. But this is going to be a strong level today, and we do reach those higher levels. I do expect a pullback for these reflows to be taken and potentially collect this demand below. That daily gap that this is sat in, or fair value gap, it didn't actually fill, so that would be the top of the fill there. So yeah, just something to bear in mind. Yeah, that'll do. Trade safe.